morning, good afternoon, or good evening, depending on where in the world you're signing in from. It look like a bit of an international audience today, so always love to see that. I'm joined today by the CEOs of GFG Resources, Northern Shield Resources, and Snowline Gold to discuss visible gold and what it means for explorers. I think we got a good conversation today. I've just got a bit of housekeeping to get through before we get to the protein of today's discussion. First, today's event is being recorded, and that recording will be available later this afternoon. It'll come right to your inbox if you're registered, and it'll be posted both on six.com, but also on our YouTube channel. I should also say this is an interactive event today. Once we get started, there's a chat box in the bottom right of your screen, the bottom rightmost button. You can ask questions to any of the speakers today. If they're very, very specific to an individual security, we might pass it to them to allow them to answer after the event. But if it's on topic, we're going to try to get to as many questions as we can today. So I think that's mostly it for housekeeping, but I'd love it before we get into the conversation, if the three of you could just introduce yourselves to the audience today. Brian, I'll start with you for a quick introduction.
Thanks very much, Romeo. Brian Skanderbeg. I'm the president and CEO of GFG Resources based in Saskatoon, out in Western Canada. Have a portfolio of projects in largely in the Timmins area and are about a 20 to 30 million market cap company.
Thanks, Brian. Ian, I'll shoot to you next.
Thanks, Romeo. Good morning, good afternoon, good evening, everyone. My name is Ian Bliss. I'm president and CEO of Northern Shield Resources, based in Ottawa, but with a flagship property in the Burin Peninsula of Newfoundland, being explored for epithermal gold, silver, and tellurium.
Awesome. And Scott for the last intro.
Hey, thanks, Romeo. And hey, everybody. I'm Scott Birdall. I'm the CEO and co-founder of Snowline Gold. We're a gold explorer based in the Yukon Territory, and we have a large land position in the Yukon, as well as a flagship discovery called Valley, a large system just near surface with lots of visible gold.
Awesome. So I'm going to go ahead and get started with a number of questions that we've prepared. Scott, I'll actually start with you on this first one. What do you think are the most common misconceptions investors have about visible gold discoveries? And what does Snowline do, or you personally, to educate the market to prevent overreaction or undervaluation?
Well, one thing I've seen a lot is sort of rules of thumb around visible gold. And I think that those are, you can basically throw those out the window. I've seen and heard from investors, okay, you have, this much VG, therefore you have, this much grade. But of course, visible gold is, it's basically just a mineral. It's not technically a mineral, but, it's one substance in your drill core. There might be a tiny bit of it. There might be a lot of it. And it really just indicates that there is gold there. So I think it's really important to add context when you're putting out, when you're talking about visible gold, when you're showing images of visible gold, when you're showing drill core, just to have that context with images, having a scale bar, having some description of what it actually means. I mean, you can have a vein that's laden with visible gold, but if it's only 1 millimeter wide and the rest of the rock is totally barren, then, where does that get you? It can make for a very nice graphic, but it doesn't necessarily mean much for your actual results.
I appreciate that perspective. Brian, I'll shoot it to you for misconceptions about visible gold.
Yeah, I think as a geologist that's worked in gold for 20 years and looked at gold systems, I've probably seen, hundreds and hundreds of VG occurrences in different systems. And, I think you do develop a feeling for what something's going to grade, and you're not always, bang on, but I do think you get a pretty good gut for looking at a piece of core and saying, is this 1 gram, 10 gram, 50, 100, 500, 1,000? And so trying to convey the presence of VG into an investor about what's the continuity of that VG. And obviously you're only dealing with a grain or 50 or 100 grains, but trying to convey what continuity of grade might look like or be interpreted from a given VG sample is a really important piece to me that I think I've been trying to find a gold system and then prove a gold resource and turn it into a mine. Really all revolves around what's your continuity grade. And so that's the piece that I think is really important. VG doesn't always mean high grade. VG may well mean 1 to 2 grams. It may mean 10, 20, 50, 100 grams. Presence is always special to me, but trying to understand the context and the continuity is really what we need to get to.
I appreciate that. And I'll throw it to you for your perspective on misconceptions.
Yeah, I mean, as both Scott and Brian have said, I mean, the biggest misconception is the perception that VG is always equal to high grade. As both of them have said, it's not. I mean, it depends on the grain size and abundance in there, but there's the general perception that VG equals high grade, and that's just not always the case whatsoever. And so the best thing is to wait for the assays, and critically, as Scott alluded to, is to provide context of what exactly you're sampling, what type of sample it was, and the size and the scope of the thing. So context is always important when dealing with mineralization, in particular visible gold. But the greatest misconception is VG equals high grade, and that's just not the case.
That's good. We got consensus on that one. I got a pretty complicated question. Anita, I'm going to start with you on this one. And that's, how do you balance the immediate marketing potential of visible gold, which is obvious, against the need for comprehensive geological understanding? Do you think there's risks in emphasizing it too heavily? And when talking to investors, how do you manage that narrative so you don't become incredulous, but you're still leveraging promotional value as much as possible?
Yeah, two good questions. I'm going to actually answer the second one first, because these are both sort of relevant to Northern Shield in sort of recent weeks. So yes, there's always a risk of overemphasizing visible gold too heavily, as there is with many things in life. But in this case, one first has to draw the distinction between emphasizing or overemphasizing and our obligations to disclose visible gold, because in many instances, the observation of visible gold may be deemed material in case we're obligated to disclose it. But earlier this year, I was concerned about exactly that, about overemphasizing the visible gold. So in the interest of not wanting to appear over-promotional, on one instance, I tweeted a picture, because we had two occasions where we put out press releases and describing the visible gold, but the market essentially yawned at it. So the sort of the third time said, okay, I don't want to be over promotional, and just tweeted a photograph of some of the rocks, including the visible gold. And for whatever reason, that time the market decided to take up and take notice. And so suddenly it became promotional. And so we very much were aware of not trying to overemphasize and overuse the visible gold. So we thought we toned it down, but for that time, the market really accepted it. So, sometimes it's a matter of, you're damned if you do, damned if you don't. And last month, of course, we found some more visible gold, and we disclosed that a few weeks ago in a news release. And in this time, in that news release announcing this visible gold, we also accompanied that by a very detailed step-by-step presentation running through all the geological criteria of why the area we found that VG in is so important. And so once I got their attention with the visible gold, I was going to make darn sure they knew about all the other factors that are so important, the alteration, potassium over lumen ratios, and all the other stuff that is generally considered too boring or technical to talk about, but it's vital. It's absolutely vital in the understanding of not only the context of the visible gold that we were announcing, but all these other criteria. They're all ingredients that point to the potential of high grade and large tonnages we think we have at Root and Cellar. And it's not just about the visible gold. So not only did I balance the disclosure of the visible gold, the comprehensive geological understanding, but we used the emphasis on that VG in the first place to open the door to basically encourage the shareholders to have a closer look at that comprehensive geological model that we built up over the past year. Because we all like VG. There's no one that doesn't. When I'm down on site, they have to kind of use a crowbar to pry me away from the microscope of the sample. But at the end of the day, it's the understanding of the exploration model, the comprehensive exploration model, that gets us so excited. And we all like VG, but what we like about the project is all the big picture, and that's why it's very important for shareholders to understand the overall geological model, which is sometimes hard to get across. But in this case, I was going to use the VG to as an opportunity to make sure that model was presented and they had time to review it, and I think it worked this time.
Well, thanks for that, Ian. Brian, how does GFG dance that wire between being promotional and also having a geological understanding?
Yeah, I think Ian's context on materiality is a good guidance to start with. Publishing some photos is, if management deems it to be a material piece of information, we're obliged to. So I'm all right with that. I think one of the things we do, and we spent a fair bit of time in our last webinar with yourselves on, was really showing different types of pictures and trying to understand and convey what a sample of VG might reflect. Here is VG integrated 1 gram and why. Here's VG integrated 10, and here's VG integrated 100. And that might be all core examples. So that's just sort of amount of VG and distribution of it. And then there's the piece of project stage. So if you have a project stage and you're out in a greenfield target and you're looking under a swamp and you somehow get a sonic hole and that thing has a bunch of VG in it, that's a very different implication than finding 1 grain in a drill hole near an old mine. So trying to convey what this VG means for the development of a given target or deposit, I think, is the other piece. So education on pictures and distribution and sort of examples. And I think with ourselves, we try to show a few pictures of what this might mean. And then talking about the stage of the project and where you might take this project and why VG in a single occurrence, if it's in the right place, might be a really, really relevant piece to an explorer to latch onto from a philosophy and targeting point of view.
Well, thanks, Brian. Scott, I'll throw it to you for how Snowline. I mean, you guys have had a significant amount of visible gold. How do you guys do this balancing act? You're on mute, Scott.
Thanks. Yeah, I think Ian and Brian both bring up really, really good points, and we walk a similar line. And I think on the one end of the spectrum, there's that obligation to disclose. If it is a material discovery, but then as Brian says, there are differences in meaning depending on where you are in the exploration stage, what the target is, etc. And even just what is the effect to your overall exploration thesis. And so with Valley, I think through our first 40,000 meters of drilling, one of our geos just tallied up how many VG instances there have been, and I think it was like 6,000 to 7,000. It was 1 every 6.3 meters of drilling. So at that point, throwing a VG visual into a news release isn't that it's kind of gone to the other end. Like it doesn't really matter. People know it's there, and obviously the story there is the continuity, not the instances of VG. But then going and looking at our other targets, I would think long and hard about if we were just to say, okay, we have a new target, there's VG there, and that's the headline, that's the release. It's basically akin to other metals of just releasing visuals and going there. If you don't provide context, if you are just leaning on that VG, I think you're putting yourself in a really weak spot. But nonetheless, it does provide some context to a brand new target. Finding VG there in some of the first outcrops, that's obviously an exciting indicator that gold is there. And I think at the end of the day, you just have to remind people that assays are what counts. Assays are what matter. And even then, once you do get the assays, presenting those in the right way, showing true widths, doing, all the things that have become industry best practice, and making sure that those assays have context as well. But the VG is just the first piece of the puzzle. I think that any investor out there today who's throwing their money down every time they see VG in a press release is going to be out of dry powder, in their first day, basically. So hopefully it's getting to be an educated market, but nonetheless, that doesn't absolve us of any responsibility.
Great, thanks. There's one note from the chat that I'm just curious for your perspective on. That's Pete Dimmel writes that the biggest problem with VG is sampling. As grade depends on how much host rock is included. So he says the assays can be improved by making the sample around the visible gold smaller. Curious if anybody has a perspective on that. Brian, I can shoot it to you if you've got one.
Yeah, look, I think we're all geos here, and if you look at a sample and define a sample, when you take it, you want to stick to a given geological domain. And so if you have a vein and it's VG bearing over 50 centimeters, you want to sample that vein. If you have a vein that's 1.5 meters and it's peppered through VG, then it's probably appropriate to sample several instances through that. When you start seeing really narrow samples, 10 centimeters, it's not anything I've ever chosen to recommend as a QP. It's not a mineable width. It's going to be diluted as you take it into that scenario. So super narrow intervals are always, to me, not preferred. We would typically not go less than a half meter with GFG, and we try to stick it and let it truly be guided by what the geology is telling you in terms of sample interval.
Well, thanks. And Ian or Scott, if anybody has an additional comment on P. Dimmel's note in the chat, feel free to shoot now, or I can jump to the next question.
Yeah, again, it all goes back to context. I mean, you can narrow whether it's a drill core or whether it's a grab sample. You narrow it down. You can exaggerate the veins, the grade. So it's all a matter about context, and again, making sure that the investor is aware of what's sampled. But again, it's a procedure that we don't like to do. At the end of the day, if you have a 10 centimeter sample of core, as Brian said, it's not going to cut it on its own, and it's going to sort of come out to a wash. So, yeah, sample, with the mining point of view in your mind, and not promotion, because it's the true data that we need at the end of the day, and it's going to come out. So, no point in exaggerating it.
Makes sense.
Yeah, one point, just when you do get visible gold, depending on what your deposit model is or what your geology is, if that's quite different than the rest of the gold that you're targeting, or even if it's not, you can end up with discrepancies, and it is important from a technical point of view to really examine that, to potentially to cross compare to like screen metallics or other assay techniques, just to make sure, because you can actually end up using a conventional method, either under or over reporting what you have in the visible gold, and so you have to be pretty careful of that and cognizant of what that can do to your statistical modeling, and so on. As you but that's really not so much it's something for the investors to be aware of when you see visible gold in results, and making sure that those assays have been carefully looked at. But yeah, it's certainly something for the technical side to be aware of too, as most of us are. The visible gold can certainly skew things, and you want to make sure that you're accounting for that in processing.
Great. Brian in the chat has some agreement, Scott, with the previous comment, saying assays matter, exclamation mark. He says a junior mining junkie. So just some agreement from the chat. Always good to see. I do want to talk briefly about scale versus grade, because I know in base metal operations, scale often dominates, but in gold, you often hear grade is king. But we have seen mines, successful mines, really across that spectrum. So curious, and Ian, I can start with you here. How do you weigh the grade tonnage trade-off in your projects, and at what point does a high-grade, low-tonnage prospect become more attractive than the reverse, a low-grade bulk tonnage?
Well, grade is certainly what catches investors' attention, and at the end of the day, that's really what we all seek. It's especially true in early-stage projects where one may not have enough data to start talking specifics about tonnages. So grade is really the only thing we can tout in very early-stage projects. But the truth of it is, there's no real king. Neither high grades nor tonnage on their own prove profitability by themselves. And although grade and size are the most critical variables in the mining business, they only tell part of the story. Of course, all else things being equal, higher grades are king. But you really got to be comparing that to one specific project. Once you start branching out and comparing that to multiple projects, multiple jurisdictions, it may not be so important. And there's a whole bunch of other criteria. Obviously, you have grade, you have tonnage, you have geology, you have geometry, geography, politics. They all come into play. And let's look at two occurrences in Northern Ontario. You have the chromatite deposit in the Ring of Fire, which is some of the highest grade metallurgical chromite in the world, one of the largest resources of metallurgical grade chromite in the world, and it's still in the ground. Right next to it, you have a relatively small but very high-grade nickel deposits. It's also in the ground. So, grade and tonnage is only one of a variety of factors that's ultimately going to influence the profitability, and it's going to be the deposit that dictates that. But on early-stage projects, obviously, grade is somewhat more important, just because you don't always have those numbers to start talking about tonnages.
That makes sense. Brian, I'll shoot it to you for your perspective on grade versus scale.
Yeah, I mean, it's jurisdictional driven to me. So certain areas and camps, grade will allow you more flexibility on how you choose to develop an ore body. And if you took Timmins for an example, there's ore moving up to 180 kilometers to 6 different mills. And so as you move up this grade chain, you have a lot more flexibility in terms of what you can do with that. So to me, it becomes most relevant when you start thinking about the capital cost trade-off around development and dollars per ounce of annual production, and items like this where your grade, smaller piece of infrastructure, still high productivity is the may offer the highest margin. There's lots of examples where you have a Cote out there which is 0.9 grams and 20 plus million ounces, where it's the opposite. But grade is king. Grade is helpful. Grade allows flexibility in terms of how you choose to process it or where you choose to process it. So it to me, it's always a consideration, but it's really only at that more advanced stage where you start seeing it drive a path a little more in terms of the grade tonnage trade-off. But yeah, I would always take grade if given the choice.
Yeah, fair enough. Scott, I'll throw it to you for that same question.
Yeah, I don't know how much I have to add, except just kind of emphasizing the margins and the economics. And I think, gold's not unique in that the grade is important. I think it could be any commodity. And yeah, higher grade tends to lead to higher margins. Obviously, if everything else is the same, you're moving the same amount of rock to get more, more product for it. And so that's better. When you do get into larger tonnages, it can potentially open up different processing techniques or options. Thinking of like a high grade veins that generally aren't, you're not seeing it in 3 dimensions, just a big continuous thing for hundreds of meters. I'm talking multi-ounce per ton sort of deposits that you're, or even just many grams per ton that you're mining underground, versus you get big low grade bulk tonnage things that then, okay, there's a cheaper mining option available to you. But at the end of the day, that's still just how your margins stack up against, essentially your capex. And yeah, so what makes the most sense going forward?
No, for sure. Appreciate that. I got one question. Scott, I can actually start with you here too. And that's often see, and I think increasingly, companies report high-grade gold results over extended intervals. How far do you think this, smearing, people call it, of grades go before it becomes misleading? And is there a marketing angle, you think, to these reporting practices?
I would say the marketing angle is probably that you just want to show more continuity. As Brian talked about, continuity is important in geological systems, and grade smearing could come down to, okay, you intersected that 10 centimeter vein and it's got thousands of grams per ton, and you want to make it look a little bit more beefy. And yeah, I think that in terms of where the line is between misleading and not misleading, I think that you just have to be transparent. If you've got to break it down, you've got to show what those, how those intervals hang together. I can see from the reporting standpoint of, you have a mineralized zone, and yes, there are kind of lower grade and higher grade parts of it, and you want to show, look, we found this big zone, and this is what it averages. But at the same time, I think where it crosses the line into misleading is if you're sweeping a lot of sub-economic mineralization under the rug. Like, if you say you hit 10 meters of something, but 9 of those 10 meters are 0.2 grams per ton, like, yeah, that's anomalous mineralization. In a certain context, that might be mineable mineralization, but in most, it's probably not. And then, if you just have that 1 meter carrying everything and you're not disclosing that, if you're not upfront about it, that would be quite misleading, and ultimately, probably inappropriate just to smear it over that non-economic stuff anyway.
Great. Brian, I'll shoot that question to you as well, actually.
To me, it's all about cutoff. So if you are an open pit scenario, you should be reporting things at a 0.2, 0.3. And if you have higher grade intervals that meet a 3 gram, a 5 gram, or 10 gram sub interval, you need to show those. And you might have an interval that's at a 0.3 cutoff showing 10 meter widths. And I think it's appropriate to quote at that cutoff and show the included. And anybody that's reading that will quickly pick up that, okay, you might have 90% of it in that sub interval, and you might have 10% of it in a broader interval. They'll see that, they'll understand it, what it is. So I think it's just disclosure. We personally will always show things at a 0.2, 0.3 if it's in an open pit environment, and we'll show the high grade sub interval, and we show both transparently and talks towards it. And I think pictures help too. So.
Oh, great. There's one question from the chat. I'll throw it to all of you. If anybody has an answer or wants to speak on it, please do feel free. It's an interesting question, I think, but it's really about financial strategy. So Kay from the chat asks, how should companies approach financing when visible gold is detected, but before assays are complete, in that period when the market's excited? Just what do you think is the best strategy in such a scenario? I'll throw it to anybody who's got an instinct on it.
Yeah, we wouldn't.
Go ahead, Brian.
Yeah, we wouldn't do that. I just think you leave yourself very open to disappointing investors one way or the other. And I do think it's material. So if you've got a visible piece of core and you don't have an assay for it, how can you finance without disclosing a piece of material information? So I personally, we wouldn't do it.
Throw it to you, Ian, if you had a
comment. I just echo that. I mean, you're just opening yourself up to all sorts of problems if you base a financing on visible gold or any other visual mineralization. Like just wait for the assays and play it safe. I mean, maybe when you're drilling holes where visible gold is a dime a dozen, it's a different scenario. But when it's fairly unique, just wait for the assays.
Yeah, I would tend to agree, except that, I have to basically speak from the exact opposite experience where, we did drill our hole 7 on Valley, where we had really dime a dozen, hundreds of instances of visible gold, widespread mineralization. And, that was something that, okay, well, this is material. Like, we have to put this out, and that was back in 2022. Lag times on assays were months. We couldn't just continue to drill this thing and not disclose to the market that we've gotten into it, with the usual caveats that we don't know what the grades are, and that kind of thing. Although we had some comparables in terms of the holes we drilled the previous summer. We'd seen the same style of mineralization, smaller intervals, less VG, and but even those holes were good still, like 100 meter plus, gram per ton plus, and so we put that out there, and we had people beating down our doors. A very fortunate situation, obviously, but trying to give us money at big premiums with no warrants attached. And so it was like, well, okay, these people are these groups are investors. They understand what they're getting into. They understand what we're into here. So yeah, I mean, it's that's a pretty unusual situation. For the most part, we weren't really just kind of flying the flag saying, look at this, trying to get money under the hood while we could, and leaving people in the lurch. And we had mixed feelings about it too. We cut the size of the investment. What was on the table, we didn't take all of it. And I think ultimately, for some of the reasons there, but also because we saw the upside too. And we said, well, hold on, I think it's that probably works to everyone's advantage to wait and see the assays. You reduce the investor risk, but reduce the company risk to taking a whole bunch of money and then finding out that it's much better than we thought. And so I think we found a middle ground there that works. But none of that I agree completely with what Brian and Ian are saying as well. That was a pretty unique scenario.
Yeah, it's unusual. Those unusual ones always pop up. But speaking of, Tom in the chat, speaking of unusual scenarios, asks if anyone on the panels ever had an early stage project with visual gold in samples that weren't supported in the final assays. Just as a counterexample of something unusual there as well. Anybody, if you have an example, please go for it.
I just think it happens, right? It happens all the time. If you have a grain or two and you're not a sulfide associated, there's no fine gold in it. Very easy to get a sample of 2 or 3 grains of good looking visible gold and get a half gram out of it regularly.
So, Ian, Scott, do you guys agree? Do you think it's fairly common?
Yeah.
We've seen it too. We've seen it too, where, you know, fine grain gold, you know, a few scattered grains, it comes back much lower than anticipated, for sure.
Great.
Yeah, exactly. And, you know, even, we've seen visible gold on a lot of different targets now. Haven't necessarily gotten, even on Valley, you know, there are intervals with visible gold that return, you know, half gram, like Brian was saying, a sub gram. So it really isn't the be all and end all, and assays really matter.
One thing I would add, though, that it's interesting as technology kind of advances here. So we've had examples where we had maybe a 2 gram visible gold bearing sample, and we're like, well, we wanted to understand the context more of it. So the photon assaying and using other pinpoint assay methods to understand where the gold is in a given sample, and if there is more gold than just that one visible piece, really gives you context. So, you know, in instances where maybe that's happened, there's other technology now to help you understand what the opportunity is, or just more about that system. So I think that's an interesting one where just a lot more information can be garnered with what's out there these days.
Great. Tom in the chat says that makes him feel a lot better. So appreciate everybody's answer there. One question I've got is, beyond obvious, you know, visual appeal and all the marketing stuff we talked about so far, how does finding visible gold influence your exploration strategy from there? So what changes do you make, if any, to your existing exploration strategy when you find it? Throw it to Ian, actually, if you've got an answer.
Yeah, well, just recently we thought sort of 2 different, you know, the visible gold has 2 different influences on our exploration strategy. One was sort of driving it, one was confirming it. So the significance of VG often depends on where you are in the history of your exploration program. I mean, the first time we found visible gold at Root and Cellar was actually in boulders, but we placed quite a bit of significance on it, and it pivoted our exploration because we began to think that that area where we found the VG and these boulders was on the periphery of the mineralized system based on some of the recent drilling. But when we found you know, it wasn't just one boulder, I think it was probably about a dozen different boulders with VG. We knew based on the geology and ice direction that we were within tens of meters of the source. And so we were about to sort of write that area off as an area of high potential, but clearly those boulders redirected us into, no, we need to go back and have a look at that area. And since then, we're starting to find the structures that visible gold probably came from. So that actually totally redirected our exploration. More recently, we've had a case where both drilling and sampling showed us a bunch of textures that showed we were in the center zone of one of these epithermal systems. So, you know, you're basically above the bowling zone. The bowling zone is where you expect to see your gold, but we're right at the very top. And we had a lot of textures that were telling us, a lot of chemistry that telling us we're at the top of one of these vein systems, which is exciting. But then, you know, so we had all of the evidence of that, but then we actually started finding VG, and that just sort of reinforced our interpretation that we were in the right area, rather than sort of pivoting it. It came at the end and reinforced our current interpretation that was the area we should be focusing on. So 2 different end members of using visible gold as in part of your exploration strategy.
Appreciate that, Scott. Don't know if you got a perspective on how you shift or pivot when you find visible gold.
Yeah, no, I think that's a really good point that, you know, VG itself can be almost an indicator mineral. It's obviously what you're looking for if you're looking for gold, but at the same time, it can help you position yourself within a system. And, you know, it can have just at the very early stage, just some obvious indicators for fertility, for decent metallurgy, you know, assuming that a bulk of your mineralization is held as visible gold or similar. And you know, we've been fortunate in using visible gold as just sort of one of several tools in terms of, again, this is very specific to the deposit type, but where you have just thousands of these little veins, and not most of there are a bunch of different vein generations. Most of them are mineralized, not all of them are, and so you kind of have to look at how many of these veins are there, to tell if you're in good grade. But then even within the veins, we've hit some high vein density zones that didn't have much gold content in them, and so you're actually looking in the veins like, okay, well, is there actually gold in them? So in some ways, we're almost exploring this gold system like a base metal deposit, where you get their core back and you just have a good look at it, and you can start to get a handle on the overall grade, very qualitatively, but still enough to guide your future exploration before you're waiting for those assay results to come back. So, so visible gold has been an extremely useful tool in that respect.
Appreciate it very much. Brian, I think it's on to you for this question.
Yeah, to me, it's the presence or the character of the visible gold and as it relates to the system. So what I'm most interested in finding is visible gold, or any gold that ties to a system that has continuity and that has scale. So if we're out under an area where we know there's no exploration been completed, but we're finding gold in the till, and we're finding gold in sonic holes, and we can see that, and it's tied to this shear zone that is this orientation. And we can look in that in detail and say, look, there's a regional scale structure. That structure now we know has this current signature, whether it's geophysical or geochemical or pathfinders, and we understand it now to be fertile. Immediately that target will move up to the top of our pyramid. And something like Muskego, which is a target of ours in Timmins, would have sat down our pipeline further for the last couple of years. And with a couple extra pieces of data, all of a sudden that target is now moved up to be, we got to drill it, and we got to drill it as soon as we can. And so that presence of visible gold, and there's lots of other data that we use to incorporate it, just really cemented and reassessed the fertility of that area. And so a single occurrence or a single piece of data information can just bring your eyes back to a target, and lots of good examples. But for me, it's all just about trying to say, what's it telling us about the system?
I appreciate that. Now, I do have a question for each of you individually, but please do also take this opportunity to promote your project, talk about your project. Brian, I will start with you. GFG has been involved in various exploration projects that target high potential gold deposits. Can you share how the discovery of visible gold has impacted your specific exploration strategy at GFG, and what specific steps your team takes to assess the quality and potential of an ore body once that gold is found?
Yeah, no, I think I could probably flag highs and lows. And, we've had some targets that had really strong primary drill results, visible gold at surface. And we actually managed to get exceptionally good drill results on a first pass. But we went to follow it up on 10, 20, 30 meter spacings, 50 meter spacings, and we couldn't trace it. It was an extremely high nugget effect system where visible gold didn't have continuity, and it resulted in, killing a target that looked very promising off the start. The flip side of this is looking at something like Muskego, where we've built a fairly thorough understanding of what the gold is telling us. And so if it is tied to sulfide, is it just the presence of visible gold? When we do the photon assaying of this piece of rock, we can see, look, there's gold distributed throughout the entirety of the rock. The visible gold in many instances is probably a remob of just fine gold. In not all the cases, but in quite a few cases, you find coarse gold that reflects the presence of finer gold. And so I'm out in Timmins. We've got a great example at Muskego where visible gold yet hasn't been seen in a diamond drill hole. It was only in a sonic hole that we're being used to sample till for. And we happened to get a piece of rock at the bottom of that sonic till hole, and it had visible gold. And lo and behold, it was in a shear zone, and it was tied to a bunch of pathfinders, and it fits on one of our main structural corridors. So, as exciting for us is we have two main target areas in Timmins. We've published a lot of really great drill results with some really strong visible gold at an old mine called Aljo, and we're drilling into that. And we've had some exceptionally good results, and we're pending assays on that. And that's a really fascinating system where we have gold in drill core underneath an old mine, and it's moving towards an advanced target that you can see creating a resource on down the line with further drilling. And then we have visible gold, like that is truly the first piece of rock we've seen in this swamp. And that is incredibly exciting. So I think it's a good, end member application with what we're doing, where you see it at a resource stage or near resource stage, and you're seeing it really early in the exploration cycle. And both of those things are telling us really exciting things about the systems that we have in Timmins.
Awesome. Appreciate that. I guess I'll shoot it to Scott. So in your opinion, has Snowline moved beyond the initial discovery phase? And if so, what's your strategy to maintain investor interest during the classically challenging kind of orphan period of the Lassonde curve?
Well, I mean, we're still exploring a valley. We have an initial resource out, but we're still, it has big open edges to that system. So we're still building on that scale. So, we're still by definition in the exploration stage and trying to see what we have out there. And ultimately, I don't think that maybe this is one of the advantages of exploring in a bear market or making a discovery in a bear market is that, we never really had a euphoric run up either. I feel like there's always been sort of skepticism or too fresh of wounds or so on, even in folks who are very, supportive and excited about the project. I feel like we've never really kind of gotten to that euphoric peak. So, maybe we expand things further and we get there and, then we have an orphan period to deal with. But no, we've had a slow and steady climb, which I think is fairly unusual. And that's reflected in, we had just piecemeal little land positions out in our area when we made our valley discovery. And there was almost no other staking there. We just incrementally built and built and built to the point where we have 3,600 square kilometers there. We basically staked everything that's of interest to us and just consolidated that land position. Whereas, had we made that discovery in 2010 or 2011, we would have had 30 companies in there literally within the month going at it. So, it's certainly a different environment that we're exploring in now. And the other part of that, in thinking about that Lassonde curve, because, that is a real phenomenon. Like it affects different companies differently, and it's just a model. So it's never going to perfectly reflect reality. But nonetheless, part of that is that district scale that we now have and the targets that we have within it. And, it's always been our intention to test whether there is a district out there. And that was why we launched the company. That's why we started exploring where we started exploring and finding something like our valley deposit right out of the gate is an extremely strong proof of concept that, okay, it wasn't this target looks great, let's start a company around it. This district looks great, let's start a company. And sort of find something like valley just really emphasizes that. And, we're still finding new targets out there. We're seeing lots of really exciting geology out there and samples out there on these other targets. So, we're certainly hoping that we can make another discovery. We think it's pretty unlikely that valley is sitting out there all on its lonesome in this very fertile looking area with big anomalies all over the place. And so, if we can get into another discovery curve at the point where we do start to exhaust the first curve and kind of just stack those up, that would be obviously an ideal scenario, and just keep the excitement going through to production on the first discovery.
Awesome. Thanks, Scott. And Ian, I know there's more visible gold discovered in August for you guys. What's next for investors at Root and Cellar and Northern Shield more broadly?
Well, we've just completed a high-resolution magnetic survey, LiDAR survey over the central piece of the property where we're finding all these centers. We have done, obviously, an airborne survey in the past, but once we began to realize the structural orientations of these vein systems at depth, we wanted to rerun that survey. That survey has been completed. We're just waiting for the processing of that data. And that's really the final step before sort of fine-tuning a drill program being planned for this fall. But as I say, we're advancing our flagship Root and Cellar property in Burin Peninsula of Newfoundland. It's being explored for gold, silver, and tellurium with strong indications of copper porphyry, which are often related and members of these epithermal systems. We certainly have high grade of all those components. I mean, we have gold up to 111 grams per ton, silver up to 1400, tellurium up to 700 ppm, which is extremely high, and copper. These are grab samples, but up to 10%. And so the grades are certainly there, but equally important, we started to define a very large footprint of low grade mineralization. And this is just this is what we really try to get across to our shareholders in a recent presentation. We're not in the main system. This is all stuff that's leaking up from depth through these structures, and so it sort of paints a picture that there's more mineralization at depth. So we certainly have indications of high grade around, and defining a very large footprint. And it's one of the benefits of exploring for low sulfidation gold systems. They are often associated with bonanza grades of gold and silver, for that matter. Typically relatively small tonnages, but the grades are often so high that the ounces can come through at the end of the day. But a select few of these low sulfidation deposits are also associated with very large tonnages. And when you look at examples from around the world, these unusual large tonnage, high grade, low sulfidation systems, they typically have one of two associations, and that is either they're associated with alkaline intrusions, so alkaline related systems, such as Porgera or Purport Creek, or they're in shadows of copper porphyries, or perhaps in aborted copper porphyry systems like Bruce Jack. It sort of fluctuated between the epithermal and the mesothermal system. And so we see both those associations at root and cellar. We certainly have alkalic or subalkalic volcanism. The tellurium is an indication of that too. And clearly have indications of a copper porphyry, or perhaps a boarded copper porphyry, but we're in that shadow of the copper porphyry system, and so we have those criteria, and a lot of other data over the summer as continually points in the same direction. So we have all these associations, a very robust exploration model, and of course the visible gold, and that's why we're so excited about the next phase of drilling in root and cellar. And even relatively little things. We have a MSc student from Memorial University on the project, originally mostly to do with just the mapping and some of the alteration and the timing of these events. But he came up with some plots the other day using quite an innovative use of assay data instead of whole rock geochemistry as a proxy for the alteration minerals. And it just highlighted this main area, what we call the discovery area, again, which we already interpreted as being one of the upflow zones, and his work, very, very strongly supported that. So that sort of came out of the blue as an add-on, but it's all the different data sets keeps on pointing in the same direction, and that gives us a lot of confidence going into this drill program this fall.
Awesome. Well, Ian, Brian, Scott, thanks so much for this conversation. I think it was a good chat. Hope investors in the audience learned quite a bit. There are a couple questions we couldn't get to today. They're just specific to individual companies. We want to make sure the relevant companies get them and then get answers as soon as possible. But I'd like to thank everybody for joining us today and for engaging in the chat. Really appreciate it. You should get the replay this afternoon. But gentlemen, thank you so much.